Hi guys, so today I want to show you how I use market structure in my trading strategy because it is a very important part of trading. So guys, let's start with the overview what I will cover today in this video. So basically market structure, first is types of the trend. Second, external and internal structure, then rules how to use my structure, and then I will all apply it in one trade and show you an example so you can understand it better. So guys, let's start with first, types of the trend. It's just basics so you understand what are the trends in the market. There are only two possible types of the trend. There is bullish and there is bearish type of the market. So let's now look on some examples. So yes, very simplified, a bullish structure and bullish trend is just when price constantly goes higher and higher. When you see price going like this, it means that we're in bullish market, it's called bullish trend. And when you see the same picture but to the downside, it's called a bearish market. That's very simply worded. I'll show you now how it looks on the chart. So here we are on Euro USD 1 hour time frame, and we can see that trend is clearly bullish. Low, high, just going higher. So yeah, we can see that we're here in bullish market, and then it goes lower. You can see that here it starts to be in bearish. That's just for you to understand the two possible trends. So yes, and this is most important part of market structure, external and internal structure, and also rules how I use them. So basically external structure is just bigger picture. It shows you the overall trend of the market, like on bigger price lags, and internal structure shows you what price does at the moment, where it's trading, because external structure, just imagine external structure can be bullish overall, but then when we make our way higher, price can pull back and external will be bullish, but internal will be bearish. So let me explain on TradingView. So here you can see the downtrend. You see this is a candle and this is a wicks candle, and then how I identify my internal swing low is if, for example, here we take out the wick for the next candle, and the next candle doesn't take out the wick of the previous one, and it just stays inside. It doesn't matter, it can stay inside, or the wick of this candle can take it out this high. The most important thing, it doesn't take out the low, because we are in a bearish market now, in a bearish trend. And then if for example, the next candle takes out this swing low, so the wicks candle, then I say that this is indeed a break of structure, and this is my new swing low, because the next candle here we didn't take out this wick, because if we did, then it wouldn't have been a break of structure. But like this, when we had just for example in an inside bar, and then we take out this low, then it becomes a break of structure for downside, for downtrend. And then this is our swing low, and then we should ask ourselves, what is the highest point that price has reached in our pullback? So basically here we can see that from here price pulled back, the highest point was here, and then it continued lower. So our internal swing high is high of this candle. That's all, the highest point. Very simple, very easy. So now you know how to identify your internal structure. And it doesn't matter which time frame, because all time frames are fractal, and it doesn't matter where you apply it, basically, yeah. So yes guys, and the next step is external structure. It is very simple. It is the same logic, but just a bit different. So guys, let's look on it from different perspective, from if we're in bullish market. So you can see that one candle, bullish candle, so we're clearly in a bullish trend, and then we have a pullback. So see, with internal structure, this wick hasn't been taken out, so the highest wick of this candle is here, and then we have started our pullback. Then you see one bearish candle, second bearish candle, and the third bearish candle inside of the bullish price leg. So this whole is bullish price leg, and we had just a pullback. It doesn't mean that we are in now entry bearish market, because you have seen a few bearish candles. No, It's just a pullback inside of the bullish trend. So you can see here a lower, higher low, higher high, higher low, possibly if we get expansion higher, which we do get it here. And then so you can see that under this swing high, so yeah, so you know that if the next high this week doesn't get liquidated, then it becomes a swing high. And then you should just count how many candles are there inside of the bearish candles inside of the pullback. So count 1, 2, 3 candles. And that's the only difference with internal structure. For external structure, you need 3 consecutive bearish candles for that to be an external point. So this is, and then we get a run on the high, and then a close, or liquidation, doesn't matter. So that means that this is our external structure, this external point. So it's just higher because, for example, then we can go higher. And then oftentimes what you guys can notice maybe from your experience, or if you're a beginner, I can tell you that when price pulls back, internal can be bearish, but then external structure is bullish. So I know that in some point in time, when pullback is finished, we are going to go higher. It's basically how the market works, and it works very, very often. It's very frequent. Yes, guys, so now I will walk you through some examples through charts so you get a better understanding of what internal and external structures are. So here we can see that we are in a bullish trend, and then here, pay attention to the details, please. You can see that if I zoom in a little bit, you can see that here we are in bullish trend. This wick doesn't get taken out, so the next candle and wick are below this high, and then the next candle takes this out. So this is our internal structure. This is our internal high, and this is our internal low. Then it gets taken, and then what happens next? Then price next, so we should just have to search. So yes, this is our swing low, this is our swing high. Where's the next candle or wick which doesn't get taken out? So here, no, it does. The next candle takes out, next it does, and then this wick doesn't get taken out. So this is our swing high next, but then in few candles you can see that our swing low, internal swing low, gets run and we close below it. So now we're in bearish market, internal bearish. And then yeah, just very simple, then we get a close below it. Now internal is bearish. Then our internal low is here, and our internal high, as I already showed you, is here. Then it just gets very easy, guys. Then we go higher, we respect this high, we don't come even closer to it, and then we close again below this swing low. So this is our breakout structure. Then the next candle which doesn't take out the wick below it, because we're now in bearish market. So here you can see it's very shallow, but this wick doesn't take out this wick. So this is technically swing low. And what is our swing high, guys? Our swing high is right here. Basically what I've told you, the highest point that price has reached in a pullback. So we're in bearish market, then pullback, the highest point, till we take out the previous swing low was here. So we are now bullish from this wick, but then price comes and again rejects our internal trend and goes lower. Then it is bearish, so this actually held, and then here is price a bit choppy, but then you see this wick gets taken, this wick also gets taken, this not. So next candle wick is here, next here, but then it does get taken, and then this is our highest point that price has reached in a pullback. Then it gets closed here. Very simple. But guys, here's the catch. If we zoom out now, all this noise happened in internal structure. Yes, I understand it can be a bit overwhelming in the beginning, but then you just zoom out and you see this, everything this internal bearish structure was just internal noise. But the most important is external structure, guys. You just zoom out and you see, okay, we're bullish, and this all was just a pullback to collect some buy orders, liquidity, to then push price higher. And after you see this shallow, like bit choppy internal shift, I expect then those highs to be taken. Actually, I have taken here one position which hits my take profit because it's very simple. External structure is bullish, yes. Internal has shifted, and then I expect that yes, price is ready to go higher because it has collected enough buy liquidity to push price to those highs because we are in a bullish trend. So guys, and the last part is trade example. So we're here on the gold chart, and actually I will now show you the exact trade which I took in the month of January, and I ended up making me around $10,000. So, and I'll walk you through this trade and right now how I use market structure to identify the trends and then to capitalize on that move. So here we are on daily time frame. So we can see, zoom in a bit, the price was bullish. So for example here, as we already learned, let's take it from internal structure first. Then bullish candle, bullish candle, bullish candle, and every time wick gets taken. But then if you pay attention, this wick doesn't get taken. So this is lower than this one. And this is our internal break of structure because we get only one bearish candle. So this is just internal structure. Then the next time we don't get a sweep of the previous wick high was, so here we had, here we had, here we also had, and here no. So after this candle, this becomes our swing low, but just internal yet, not yet external. So we'll see. So the first candle bearish, yes. Second, yes. So swing low, our swing low is here. We get the sell-off. First, it's just internal structure. You will see it. Bearish, bearish candle, bullish, bearish, bearish. And after this bearish candle, we have after this bearish candle, we have 3 consecutive bearish candles. And this becomes now our external structure. So this high is responsible for external structure, which is very important. As you can see, yes, we do get a close below our swing low, internal swing low, but I care only about external structure. So yes, from internal structure we could still again lower prices, but doesn't really matter for me. And then price goes higher. Bear in mind that external structure is now the high is here and the low is down there because here it's just here because only here we had 3 candles. So it's from here higher high, higher low, and then all the way here higher high. Because yeah, I think you've seen that gold has been rallying a lot in the last year or two. It's crazy. So yeah, this is our external structure, external high, until this high gets taken here. I don't care because my external structure is down there and high here. So we can possibly see a retracement back to here and then continuation higher. And when we're here, will be still bullish trend because external structure is bullish. So then price respects demand already here, goes higher, 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 and here we get a close and run on this swing high external. So this is just my understanding of price. Yes, so external high, external low. This now becomes a low because it is the deepest point of the pullback which we have reached, and then we have taken out the high. So yes, basically, but I just showed you this for you guys to understand how I view the market, and it actually didn't really impact in this scenario my trade analysis. So as I come to the market on 7th of January, I see that price on H1 is what, let's identify it. For example, from here we had bullish candle, take out the high, take out the high. We didn't take out the high, so this is our swing high, and this gets taken out here with close. Here are only 2 candles, so just internal structure. Next high, with this candle takes out the high, and then next candle doesn't. Again, swing high. Very easy, guys. Then actually this is interesting situation, because here you can see that here we do get a run on the wick, but only with a wick, no close. But we close about that high a bit later in few candles, and actually in this scenario I would mark my breakout structure as daily candle, as one H1 candle close. So yes, then we get next candle that doesn't take out the wick is here, as you can see, and body candle closed with body just here. Again, next, you can see doesn't take out, body closer here, and then we all take out the high, here not. So this is our swing high from here, if we see it from this candle, and then we get an aggressive candle to the downside in Asian session, and our lowest point of the pullback. So from here, price next candle here pulled back and then went higher. So this is our lowest internal structure, low, and here is a closure below it. And then again, now the same thing but in a bearish market. Wick gets taken out, then doesn't. Again, just breakout structure. And then this is now my London session. I was in France with my family at that moment in time. It was my 3rd day of the year which I traded. We get this mitigation of those HFGs. It doesn't really matter, I just want to show you how I use market structure. So yes, we were bullish internally, and then internal has shifted bearish. But as you guys already know, my main focus is external structure, because it holds much more often and it's more reliable. But you can also trade with internal structure. So for example, here in this scenario, external was bullish and internal bearish. So yes, overall I expect higher prices, but then it doesn't mean that I want to look only for longs, because if I have a good bias, a good context behind the trade, then I can trade against the external structure and with internal, because internal is bearish and external is bullish. So yes, we get inversion, mitigation, and then I just enter my short position on here. Again, I use it also for lower time frame confirmations. Here on 5 minutes, price is bullish. This is our swing low, swing high, gets taken out. Then next candle, which doesn't take out the wick, is here. So this is my swing high, which also closed above it. Then this is my swing low, this is my swing high. I'm just waiting for price to go from bullish trend then to bearish. That's all I need for my lowest time frame confirmation. Very, very simple. The same as on every other time frame, weekly, monthly, daily, H4, H1, doesn't matter. I use it also for entry confirmations. Very, very simple, guys. So yes, and here you can see that internal structure gets shifted. And then I just place my order on M5 for rally gap with my stops above the M5 swing high, and I just target daily for rally gap 1 to 4 R, and let's see how trade goes. And yes, full TP was hit, and it is very simple to use internal and external structure. This is basically all you need for for my strategy. It is very simple, just understanding of price, how it behaves, and the context behind it. And if you want to learn about trading more, I will leave a link below this video so you can go and check it out completely for free. We don't charge you anything for that, and you can trade with us and see which trades we take.